Good afternoon and welcome to Charting Points, a technical look at ag markets. My name is Brian Como and today is November the 16th. All right, let's get right into it today. First of all, trading futures and options does involve the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. The material is provided as is and for informational purposes only. It is not intended to be a substitute for specific financial, trading, legal, or tax advice. Neither Farmers Business Network nor any of its affiliates make any representations or warranties expressed or implied as to the accuracy or completeness of the statements or any information contained in the material, and any liability, therefore, is expressly disclaimed. Past results are not necessarily indicative of future results. Past results are not indicative of future results. All right, let's get into it. So we're going to talk a little bit about soybeans here today. It took quite a bit of a hit, about 25 cents a bushel in today's trade, and brought that down to some support, as you can see here in the chart. So this is really a weather story, and particularly a weather story in Brazil. Now, I'm not a weather expert or a weather analyst, but I'm going to show you some weather charts just so you can kind of understand what is going on. Okay, this is a conglomerate of a bunch of different estimates, a bunch of different model runs. I think there's about a dozen or so model runs in here from private to public, just to kind of show what is expected in the next little bit in Brazil. Here is the forecast, the precipitation forecast here for Friday. As we get into the early hours of the morning, and then early in the morning, about 6 a.m. Brazil time, is when you see most of the precipitation coming in. So this is a pretty standard expectation from a lot of different models. So here's all of the models on the left-hand side here. Some of the more popular ones that we would refer to here is the European model, the GFS model, and then some of these are some private models like this here. And you can see that there is a pretty steady understanding that that there is quite a bit of precipitation coming into the region, which is, what is causing some of the weakness that we are seeing here in the soybean market. Now, it's not just one day's rain either. If we kind of pull that out and look at the 7-day, here's the Friday rains here, and here's the Monday and into Wednesday rains that are forecast as well. So there's a couple of different systems that are forecast to hit Brazil in the next little while, and that is having an impact on the expectation. Now, the soybean crop is still in its very early stages of development. I've seen lots of pictures on Twitter that show, burnt up plants and everything. Some of those actually have the opportunity to get replanted. Some of them have not even been planted yet. So we are still in the very early growing stages of the Brazilian soybean crop. So heat that has come so far. If we get a turn in the weather system now, that would be a significant development in the Brazilian weather story. Much more significant than if it came later in the growing season. Now, here's what that 7-day forecast looks like as well, with those models as in there as well. Some of these model runs are only more short-term, some of them are long-term. But there is a pretty strong consensus that we see some rains on Friday and then Monday and into Tuesday of next week as well. Here is some maps to kind of show you where those rains are going to be hitting. Now, this is Mato Grosso here. This state right here that I'm trying to outline is Mato Grosso. Most of the soybeans are grown, I would say, in this circle here and even in down to here. Mato Grosso del Sol is this state right down here. There's soybeans grown here. And Goiás is this state right here, and the soybeans are grown in here. The other major growing soybean area is down here. I don't know what you call this area, the panhandle. I don't know what you call it. But, this is where the excessive rains in Brazil have been coming in. Rio Grande do Sul and Paraná and states like that are down here. They're seeing an excessive amount of rain, so a bit of an opposite to what we've been seeing here in the north central area of Brazil. So as you can see, this is a 180 hour. So that is about a little less than 7 days this is a GFS ensemble. So you can see that there's some rain forecast into there. If we look at it from a different model, this is the European model. It goes out to 144 hours here as well. So here again is, well, I'll just kind of circle. This is Mato Grosso del Sol, Goiás here. Those are these areas account for about 40 or more percent of the Brazilian soybean growing area. And as you can see, a quarter to 2 inches of rain is expected in there as a cumulative over the next 144 hours. So that could be a drought buster, particularly if they continue to build smaller showers in as we go along. So this is something to keep an eye on, as it could be a market sentiment shifter. And I'm going to go back here to the soybean chart. This doesn't show right now that they're building in a complete shift in momentum. We continue to see lower or higher lows here. We continue to see higher highs. So from a technical perspective, this is still an upward moving chart. It came down and tested some support here recently. So if we see a bounce tomorrow, that might confirm that trend line is still in place. But if we start to leak below there, there might be open up some more risk for some more downside, particularly given the change in the weather situation. Okay, looking at canola. Now, yesterday we put out a canola recommendation as it kind of moved to test this 50-day moving average here and kind of failed to do so. It kind of got into our target area here, which we were looking at to test this previous high. To me, that is a confident enough test of that previous high to kind of take that risk off the table. We did see a downward move in the markets today. Not to say that that's going to sustain itself long term, but it definitely does open itself up, particularly if the soybean complex is going to correct as a result of these South American rains as well. So it does add some risk to the table. We wanted to take some risk off and get that out of the way. Our next recommendation, I think, on canola is probably going to be when we kind of test this previous high, if we can do that, in the 760 to 770 area. So somewhere in and around that mark, if this market continues to move upward. One of the reasons why we saw a peelback in canola today was because of soybean oil. Now, this is an interesting one because soybean oil peeled back. I think it was a little over 2% today. Pretty big move. It did come down to test the 20-day moving average after moving above that 20-day moving average just a few days ago. So if it does kind of move below that in the next few days, that might be a bit of a bearish look at the markets. It did kind of test this previous high here as well. So if it fails that might be another bit of a bearish signal. And of course, we have some moving average crosses here that are looking a little bit bearish as well. So overall, this December soybean oil chart is looking a little bit bearish. It continues to look bearish. And as you can see by looking at these two charts, canola and soybean oil, these two charts are very highly correlated right now. Canola is definitely trading significantly more in tune with soybean oil than with some of the other aspects of the oilseed complex. What's really interesting about today's performance of December bean oil is that NOPA reported lower than expected stocks. So just under 1.1 billion pounds of soy oil stocks. This chart goes back to 2019. It is one of the lowest that we've seen on record here for soybean oil stocks. So soybean oil stocks are really tight. And the fact that the market fell the day after the report stated such a tight fundamental is somewhat telling. So, when the market presents you with bullish news and the market goes down, you want to pay attention and you want to make sure that if you're on the wrong side of that you are covered. Again, another good reason why to peel some of that risk off of the canola market at this time. Same thing with weekly NOPA crush. So this was this 189.7 million bushels was crushed in the month of October. This, as you can see, this goes back 20 years. So that is by far the largest weekly crush number ever recorded. It was also about 2 million bushels above market expectations. So again, this should have been a very bullish report for soybeans, and we did not see soybeans react in a bullish fashion, which is a bit of a concern. It's what you call a canary in the coal mine, so to speak. So again, you kind of want to be defensive when the market does things like this. And in Canada, the best way that we can do that is to add some coverage to canola. Also, I think we are at an appropriate coverage level for soybeans for our Canadian customers. But if you are looking to get a little bit more coverage on for your soybeans, before we make an official recommendation, this wouldn't be a bad time necessarily to get some of that coverage on as well. So what is happening with the vegetable oils specifically today? We saw crude oil drop significantly. Started the day in between $76 and $77 a barrel and ended the day south of $73 a barrel at $72.90. Actually, I can't confidently say this is the end of the day. I think it was still trading as I pulled this chart. But still, we saw some significant losses in crude oil, and the vegetable oil complex, or the biofuel part of the vegetable oil complex, is sensitive to the energy side. Again, so weaker crude oil does mean, or I think at this point in time, it is correlating with vegetable oil as well. So, this obviously is not a friendly looking chart. We broke significantly down below support. Likely that we might see a magnet pull it down even further. And if we look at where the next low is on this chart, we're talking sub $70, $68, $67 a barrel for crude oil. That could be a considerable risk for the vegetable oil complex and thus oil seeds as well. All right, didn't want to leave wheat out, or the grains out of the spectrum here today. Wheat did take a little bit of a hit today as well. We see the winter classes moving back towards support here. Chicago in the last few days has lost most of the gains. Again, this market still looks sideways to me. So, unless this previous support level down here at around 540 gets broken, this whole trading range is probably likely to still stay intact. But again, I would change my position if we started to make a new low in this market as well. Kansas, in a similar story, traded down near support near 6.25, down to 627 today. Again, that's right near where previous lows were. This market, as you can see, kind of continues to trade in this channel downwards. So this is a bit of a bearish one. It has trouble making it over the 20-day moving average every time it gets up there. So this market, I think, is still at risk. December Minneapolis is holding on a little bit better. We did see losses in that today. It has tested this previous high now and is also struggling at the 50-day moving average, similar to canola is. Came down right to the 20-day moving average today, which it spent the best part of November and saw up above that 20-day moving average. So if we start to leak below that, that might signal another test of these previous lows around $7. The one bright spot, and this is how we'll end off today, is in the wheat markets, is this is what the basis has done for Western spring wheat in Canada. This is an averaged and aggregated number from PDQ, or the Alberta Wheat Commission, but they do publish prices across Western Canada. This particular one I take from the Northern Alberta region. And you can see here that through the month of October and November, we're still trading in higher end of the spectrum for wheat basis levels. So adding some cash coverage here in wheat, as you see, if you see specials come out from elevator companies where they're enticing you to sell some grain, I wouldn't say it's a bad idea. You can always manage your futures portion of the contract later with over-the-counter contracts, or if you have access to brokerage accounts, things like that. So this, again, this is not a bad time to start layering into some cash market sales, particularly if you want to wait out the sideways pattern in the wheat market and see if it can go higher. And then you can always add something to capitalize on forward futures movements going forward. All right, that is all we have for you today. Thank you for joining us. We will see you again next week, Tuesday. Have a great night.